Now P6 has got trial balances generated for on a quarterly basis. So these are 3 months, month 1, 2, and 3. You select the quarter here, you move on to second quarter, and then we've got balances for the second quarter displayed on the screen, and of course it can be printed as well. So these are the periodic reports. Let's have a quick look at reconciliation, one of my favorite reports here. You've got to select the account. This is a NatWest Bank account, and you've got to select the month. So the transactions are populated on the report. This one is for reconciliation to confirm that the transactions we have recorded on the bank account do agree with the bank statement. And of course, whatever figure agrees, you just tick the box. If you like, you can tick all of them. Could probably start by ticking all of them and see if you still have a difference. If you still have a difference, because if there is no difference after having entered the opening and closing balance, if there is no difference, then you probably don't need to waste time. If there's a difference, then you untick and then begin checking one by one. And of course, when we still have a red color here, it means there is a difference to be investigated. Okay, now we can go back. So these are the 15 reports. We've got balance sheets at the end, profit and loss accounts at the end, plenty of reports that we shall be looking at. And then finally, we look at year-end reports. Now, these year-end reports are quite plenty. Here we've got them classified. We have them classified. But then we have a checklist. Let's have a look at that checklist actually. That checklist is in miscellaneous, and that is year-end reports checklist. Here they are listed individually. You scroll down, and as you said, this checklist should have about 80 reports. 65 of them are generated automatically, and the rest have got to be, well, it's about 10 or so that need to be done manually. And those that need to be done manually have got either M or H hard copy in them. For example, prepayment calculations, we know we should generate them manually. It's not yet automated. Accrued income reserve calculations, they should be computed manually. And of course, we provide a sheet for that. So these should be the year-end reports, and when we click any of them, we should end up on that particular report. Let's see, creditors summary and reconciliation. We click on that. So this is the creditors summary and reconciliation. Opening balance, total debits, total credits, and then closing balance. Does the closing balance agree with what we have below? Now there is a difference, and the reason for this difference is because we entered some quarterly trial balances. We shall look at that one later. Otherwise, all transactions ending up on the creditors control account should go through. Let's see, the procedure should be, let's see, all transactions ending up on the creditors control account should go via one of these forms. Now, in case of those quarterly transaction trial balances, that was entered, we should have used the creditors opening balance form. Yeah, on hindsight, that is what we should have used. Anyway, it doesn't matter. We shall show you what you should do. So these are the 11 modules in the application, and that's a quick overview of the facilities available, and that brings us to the end of lesson 1.2. In case of any questions, please via the live sessions online. Hello and welcome to this session of Mobile Practical Accounts Training. Lecture 1. Hello and welcome to this session of Mobile Practical Accounts Training. In Chapter 2, we look at the tax return and the chart of accounts, which is abbreviated by CAO. Now in Lecture 2.1, we shall get an overview of the tax return and an extract from the app. We relate the two. In 2.2, we look at the tax return and the profit and loss account.
2.3 the tax return and the balance sheet, 2.4 disallowed expenses, 2.5 the detailed chart of accounts, 2.6 we continue with the detailed chart of accounts, and 2.7 we look at the tax return and the notes to financial statements. What is it that we cannot get from the profit and loss account and balance sheet that we have to get from the notes to financial statements for the tax return? Now in lecture 2.1 we get an overview of the tax return in the UK, commonly referred to as SA 103. Now this is an image of what it exactly looks like, the hard copy from HM Revenue and Customs. Now this one was for the years April 2015 to April 2016. Well, at times we refer to it as April 2015 to March 2016. Now this is for self-employment, this is for sole traders, and it's the full report. Now small businesses with a small turnover would fill in the short form, but this one is the full one. Now at the top here it requires your name and the unique tax reference number. Every person in the UK has got a unique tax reference number. Now here is the business name, description of business, address of the business, postcode of the business, and then up here is if the business started after 5th April 15, if the business ceased, date your books of accounts start, that's the beginning of the accounting year, probably date your books end of the accounting year, and this one is about the cash basis, money actually received and paid out to calculate your income and expenses, put X in the box. Now cash basis, which is different from the accruals basis, which in a way is tricky, which means that you don't pay tax on credit sales, which is ironical. Now okay, now that is section 1. The other section is about other information. If your accounting period if your accounting date has changed permanently, this is general information. And okay, now that was section 1. Section 2, and now section 3 is where the financial statements start. Now business income is box 15 and box 16. These the values for these boxes are extracted from the profit and loss account. We're going to relate the two. Now below here we've got business expenses. Now let's have a quick look at our profit and loss account here. Let's see we'll look at that in the next lesson. Let's just review this. Now in this category we'll look at boxes 17 up to number 31. These are for recording business expenses. So that is these are cost of sales, this is purchases, cost of sales, construction industry or subcontractors, these wages, motor and travel expenses. Now these are premises costs, rent, rates, power, insurance. Now this is maintenance costs to do with repairs. Now these are administrative costs, phone, stationery and office. This is advertising and sales promotion, interest on bank and other loans. Then below that we've got other financial charges, we've got bad debts here, we've got professional fees here, we've got depreciation and other business expenses, and below that we've got the total expenses. And then of course on this other side we've got disallowed expenses. Now this one is relevant if the values in these boxes contain disallowed expenses. So they are saying that the disallowed expenses in here should be recorded here. That implies that if you don't have any disallowed expenses for any category, then you'll end up with blank boxes on this other side. Now in lecture I think 2.5 we do talk about disallowed expenses. Let me confirm that. That should be up here. in lecture 2.4 we talk about disallowed expenses in detail. Okay, now below that we look at the net profit or loss. Now the net profit or loss is saying that basically box 15 plus box 16 minus 31, there is a profit if the figure in the sum of these two minus the figure in box 31 is a profit, and if it's a loss you should record in box 48. Now this other section is about taxation, which is actually outside this course, because in this course we're looking at bookkeeping and accounts preparation, essentially financial accounting. So taxation is really outside. That one is a separate course. So these are tax allowances, which are also known as capital allowances. They are recorded in these boxes here. And of course the tax computation basing on the profit and the allowances, these are the appropriate boxes. And we scroll down, a continuation of those computations and losses brought forward. All of that is here. And then CIS is construction industry scheme, mainly to do with businesses that do subcontracting. Now what we saw up this way is to do with the profit and loss account up to box 48. Now that is from box 15 up here up to box 48. That is, those are to do with the profit and loss account. And then we skip this section dealing with taxation and jump to the balance sheet area. So the balance sheet area is boxes 83 up to 99. That's the balance sheet area. So we've got equipment machinery, box 83, other fixed assets, box 84, stock and work in progress, 85, trade debtors, 86, bank and building society balances, 87, cash in hand, other current assets, 89, total assets. And then on this side we've got liabilities, trade creditors, loans and overdrawn bank accounts, other liabilities and accruals. And then we have net business assets. We got the capital account. These are equity accounts, equity balances, balance brought forward, net profit in the year or net loss, capital introduced. We have drawings, and then the balance at the end of the period. Now we need to emphasize that our chart of accounts, as explained in a later lesson, chart of accounts in lesson 2.5 and 2.6, its layout is based entirely on this tax return. If you can see in the chart of accounts, we start with income accounts, then continue to expense accounts, then continue with assets, liabilities, and finally we have equity accounts. Its layout is molded entirely on this tax return. Now let's see, we need to see the relations. Okay, of course, now beyond this one there's also something here to do with national insurance contributions. And then below here is a blank page where you can record any extra information that you've not been able to record on the previous pages. Now this one comprises of six pages. So that is the UK tax return. And how do we relate these to our financial statements? That should be covered in lesson 2.2, the tax return and the profit and loss account, and then 2.3 we look at the tax return and the balance sheet. Now what we're going to do now is to look at an extract from the accounting app. Now we need to see how much time is saved by this app. We've got a tax return extract here. Now, this tax return extract generates 60% of the information required for the tax return that we see on the left. 60%. Those figures relating to the profit and loss account and the balance sheet are generated. Let me click this to see what is generated. Now let's scroll up here. We start with boxes 14 and 15. Let's drag this to the left and actually probably reduce the size, because we need to see something on this other side as well. So what we see here is that the value, let's see the information in there. Okay, that one is blank. That one is blank. Now what we are saying, that when you're filling your tax return, whether it's a hard copy, whether it's online, the accounting app has generated the value. Simply copy the figure in there and record in box number 15. You copy that figure in there and record in box number 16. Okay, now we scroll down here. Let's get to the left a little bit. Okay, now we get the figure. Scroll up, that's gone too far. We get the figure against box number 17 there and record in box 17 here. Against 32, record in box 32. Against 18, record in box 18. Against 33, record 33. That is how it works. That is how it works. Now let's scroll down. Let's see. You look at number 20. You look at box number 20. Sorry, here. Okay, 6 to 15 is recorded on there. Either the hard copy or online submission. It doesn't make any difference. And then for the disallowed box number 35, that is the figure. So that is how this tax return extract works. It provides figures that are just copied straight onto the tax return. It's about saving time. And of course, as far as financial accounting and bookkeeping is concerned, the app is supposed to satisfy all the requirements. What is not satisfied at the moment are the tax computations. And of course, when it comes to sole traders, there are a bit of complications because there are some issues, there are some underlying factors that need to be considered when taxes are being computed. And we're not going into that in this particular course. So that is the relationship between the tax return extract. Okay, so 48. Now let's scroll down here. Let's scroll here. So box 47 and 48. 47, that is the profit figure. Simply copy from there and record into there. Now, if it's a profit, as far as this app is concerned, it will appear in red and you record in there. If the figure is in black, then it should be recorded in box number 48. Black means a loss, and we're going to look at that in the next lesson. All right, now we're going to skip boxes 49. We skip boxes 49 to do with taxation, and boxes 49 to do with taxation up to the start of the balance sheet area. This is the start of the balance sheet area. Okay, so what we are saying is that 7050 is copied from that box into box 83, 2500 into box 84, 4825 into box 85, 2373 into box 86, 743 into box 88, like that. When it comes to liabilities, you copy from box 91 into there, box 92 into there, and then box 94 into there. You don't need to do any computations. They are done by the app to save us time. It's about saving time. Nobody has got a lot of time. these days. There's a lot to be done. So whenever you can save time, please save the time. If there's a facility that is going to enable you to save time, go for it. Go for it. So here we're looking at box number 95. That is capital at the start of the period. We need to scroll down here. Capital at the start of the period. You just copy from there into there. Net profit from there into there. Capital introduced into there. Drawings into there. And balance at the end. Capital balance at the end into there. And of course here we do have a difference box to help expose any differences if there are any. And probably that brings us to the end of this lesson. If there are any questions, please do ask via the live sessions online. We are there to make your work easier as far as financial accounting and bookkeeping is concerned. So that brings us to the end of this lesson, where we look at an overview of the tax return and the tax return extract in the app. Now remember, let's go back. Remember here, this tax return extract is found on the year-end reports checklist, and that checklist is found in the miscellaneous module. Okay, year-end reports checklist. Any questions, please, via the live sessions, and thank you. Hello and welcome to this session of Mobile Practical Accounts Training. In lecture 2.2, we look at the tax return and the profit and loss account. The figures which end up on the tax return, where do they come from? A big percentage of those figures come from the profit and loss account. Now we have an illustration here of a profit and loss account. Now let's see if we can have the whole of it on the screen. We should pinch a bit. We need more from below here. I think we now have the whole of it here. Now remember, our chart of accounts and our financial statements are molded on the tax return. It's the one guiding our layout. Now, note number 1. Okay, we looked at that. We'll look at that in which lecture? The chart of accounts, is it in 2.5? Yes. We've got balances coming from the different accounts. Now, as far as the profit and loss account is concerned, we have about 180 accounts. Let's look at that chart of accounts briefly. 108, not 2. Cost of sales is 3. Construction industry is not 4. Wages and salaries is not 5. Car and van is not 6. Rent and rates is not 7. Maintenance is not 8. Administrative on the tax return in box number 15. Now the figures, the balances from, let's try to relate the two. Let's try to relate the two, even if we haven't yet looked at the chart of accounts. Let's try to relate the two. Okay, there we are. Now let's drag this to the left a bit, and that one in. Oh dear. Let's drag this and this one that way. That, well, is better. So we are saying that accounts 11 to 20 generate a figure that ends up as not to other income, and when it comes to the tax return, I need to widen this or make it smaller to see more on the screen. Now will this one accept? Okay, we need to make it slightly bigger there, and this other side we have to play around with our screen, but we can't see the other income accounts. Might have to make it a bit smaller. Okay, let's see. That is better. Okay, let's do that. That should be okay. All right, now we are saying that note 4, note 3 is accounts 21 up to 44. Accounts 21 up to 44. So the sum of their balances ends up on the profit and loss account as note 3, and that figure will appear on the tax return in box 17. Now note 4, we're looking at accounts 45 to 49. The sum of their balances ends up on the profit and loss account as note 4. So in this case we have 202 there, and that same figure will appear in box 18 on the tax return. Note 5, we've got employee costs accounts stretching from account number 50 to 62, and they appear on the profit and loss account as note 5. In this case we got 12,000, and on the tax return that figure appears in box 19. Now note number 2, I hope was not skipped. Note number 2 there, the sum of the balances appears on the PL as 175 here, and that same figure is supposed to be recorded in box 16 or appears in box 16 on the tax return extract, as we shall see very soon. We're looking at note 7. Now note 7 here, we are saying that balances from accounts 80 up to 95, the sum of their balances appear as note 7 on the profit and loss account, and the same figure appears in box 21 on the tax return. Now note 8, which appears on the profit and loss account there, is made up of balances on accounts 96 up to 105. And that same figure appears in box 22 on the tax return. In this case, we've got 750. Now, note 9 appears. Note 9 has got accounts 106 up to 120. 106 up to 120. They appear on the profit and loss account as note 9, and that same figure of 1825 appears in box 23 on the tax return. Now note 10. Note 10 has got accounts 121 up to 129. The sum of their balances appears on the profit and loss account as note 10, and that same figure of 392 should appear in box 24 on the tax return. This is the column where we indicate the tax return box number. Now note 11. Note 11, the sum of their balances appears on the profit and loss account against that note 11, and in this case we have 806, which also appears on the tax return in box 25. Now note 12 comprises of account 140 to 151. The sum of their balances appears on the profit and loss account as, besides number 12 there, we've got 571 in this case, and the same figure appears on the tax return in box number 26. Note 13 is for accounts 152 to 155, and those are bad debts. The sum of their balances appears here, and in this case we've got 635, and that same 635 will appear in box 27 on the tax return. Note 14 has got professional cost accounts stretching from 156 to 164, and the sum of their balances appear on the profit and loss account against note 14. In this case we have 3518 that also appears on the tax return in box 28. Now note 15 has got accounts 165 to 174, which are depreciation and disposal accounts, and they appear on the profit and loss account against note 15, and the amount is 7126, which also appears in box 29 on the tax return. And then below here, we've got other expense accounts from 175 to 180, whose sum of balances appears on the profit and loss account as not 16. And the same figure appears on the tax return in box number 30. Now, the sum of all overhead expenses. Yes, the sum of all overhead expenses is entered in box 46. Sorry, in box 31. In box 31 on the tax return. Now let's have a glance on that tax return. On that tax return. Boxes, we need to see boxes. Let me see. Oh, yes. We need to see boxes 19. Okay, from 15. Okay, well, let's switch to the tax return. Our tax return is here. Oh, this is our tax return. That's why it wasn't moving. Okay, we just have to scroll up. Fortunately, we can't see both of them at the same time. We shall have to use the one in the app. Okay, we're looking at from boxes 15. Yes. Business income. Now we seem to have moved something by error. Yes, this page should be up there, so let's cut this and paste it here. Okay, let's see what is happening. So that's 46, 47, yes. And then here we've got 15, 16. Yeah, I think we're getting the right picture. Okay, now let's see what is happening on the app. Let's see what is available on the app. Now we're going to look at our tax return. Okay, we should look at the profit and loss account actually. Profit and loss account, that is report B1. B1. Now B1, God. This is what we've been looking at relating to the boxes. Now what we need to do, I think, okay, we need to look at the tax return extract really. And this side, we go back to that display that we had earlier on. Yes, it should be this one. I think this makes better sense. Well, we've had a look at the tax return and that's about it. So what we are saying is that, okay, of course these are different business figures. That's why they are different. They are different business figures. So the turnover for this particular business was 85 and should be in there. So we basically copy from there into box 15 onto the tax return extract. Now let's see. Now essentially this is the tax return extract, and we said that it provides 60% of the figures required on the actual tax return, whether it's hard copy or online submission. So this should be the extract, and to summarize it all, this one has been summarized and we are saying this is the PL. We are saying this is the profit and loss account, and these are the relevant boxes on the tax return. If for one reason you're simply copying figures from the profit and loss account, then this is the order to follow. But otherwise, the accounting app has got those figures, and you simply copy from that tax return extract directly onto the tax return. You just have to take note of the box numbers. 17 into there, 32 nothing, 18, and like that. So that brings us to the end of this lecture in 2.2, where we look at the tax return extract, the tax return, and the profit and loss account, the relationship between the two. And that brings us to the end of this lesson. In case of any questions, please via the live sessions online, and thank you. Hello and welcome to this session of Mobile Practical Accounts Training. In lecture 2.3, we look at the tax return and the balance sheet. What is the relationship between the two? Which information from the balance sheet do we record on the tax return? Let me try to make this bigger. No, it's not doing the trick. I'll do something else. Yes, that is better. That is better. So we're looking at the tax return and the balance sheet. Now we shall first have a quick recap on the tax return. There's a section on the tax return that requires balance sheet values. So that section starts from box number 83. Here we need the values of fixed assets, equipment, and then other fixed assets, stock, debtors, bank balances, cash in hand. We got other current assets, total assets, and then here we got trade creditors, loans and overdrawn, other liabilities, net business assets. We got the balance, opening balance, net profit, capital introduced. We got drawings, and then balance at the end. So this section on the tax return requires balance sheet figures. So if you prepare a balance sheet with that layout, you simply copy figures from one side onto another. All right, let's get back here to okay, we should scroll down to 2.3. Okay, now what we have here is our balance sheet. Now we want to see how figures are interrelated. Actually, probably we might need to look at the chart of accounts as well, and we also need to emphasize that our chart of accounts is based on the tax return. We need to emphasize that our chart of accounts is based on the tax return, and in case of other countries, then we can customize our chart of accounts to meet the conditions and setup of the various tax returns. Now we need to look at the chart of accounts this side. Let's see, let's drag this up and we get there. This is the chart of accounts here. We might need to condense it a little bit. Okay. Oh dear, this is a tough one. Now we start with note 17. Note 17 for fixed assets. We just have to condense this. We don't have a choice. Note 17 is for fixed assets. Oh God, that is too small. That is better. Okay, now we're saying that note 17 is for fixed assets, accounts 181 to 188. Now the balance says from those accounts are added up to generate this figure, which is 7050, and appears as note 17 on the balance sheet against equipment, machinery, and vehicles. Now, that sum figure 7050 is recorded in box 83 on the tax return. Now we need to emphasize that if you're using our accounting app, then you don't need to go into that detail because those figures are already generated on this tax return extract that generates 60% of the information required on the tax return. So this one caters for boxes 83 up to boxes 89, and you can see that the figures do match. We got 7050. Let's see. 7050 and 7050, 2500, 2500, 4825 below there, 2373, like that. The figures do agree. Okay, let's go back to this one. Now we're saying that accounts 181 to 200. They are other fixed asset accounts, and the sum of their balances appears on the balance sheet as note 18. In this case, we have 2500, which is also recorded in box 84 on the tax return. Now next we have accounts 201 to 203, who are summed up and appears on the balance sheet as note 19. In this case, we have 825, which is also recorded in box 85 on the tax return. we've got accounts 205 up to, account 204, a single balance figure whose balance is recorded on the balance sheet against trade debtors as not 20, and the same figure is recorded in box 86 on the tax return. Next we have cash balances on accounts 212 and 213. They are summed up and the figure is recorded as not 22 on the balance sheet and also recorded in box 88 on the tax return. Then we have accounts 214 to 223, which are other current assets. They are summed up and it's recorded against as not 23 on the balance sheet and also in box 89 on the tax return. Next we have 24, which is creditors control. Just wait, I think I'm right. Yeah, creditors control. We've recorded, yeah, we've talked about other current assets, 1864, box 89. Yeah, now we're looking at the creditors balance, the outstanding creditors. It's a single balance which appears on the balance sheet as not 24, and the same figure appears in box 91 on the tax return. Next we're looking at accounts 225 to 230, which are summed up and appear on the balance sheet as not 25. In this case we got 5891 and the same figure is recorded in box 92 on the tax return. Now of course this one is generated not net business assets. It should be a sum of assets. This is total assets minus current liabilities, and then we deduct long-term liabilities and end up with the net business assets. Now remember, up here we have got fixed assets, and then here we've got current assets minus current liabilities, giving us net current assets. Net current assets plus fixed assets gives us total assets less current liabilities minus long-term liabilities, giving us the net business assets figure, or the net business liabilities. Now below that, okay, we've got other current liabilities, which is accounts 231 to account 256. They are summed up and their balance is recorded as not 26 on the balance sheet, and the same figure appears in box 93. We've got 8089.79. And next to that we've got the capital brought forward figure. Capital brought forward figure is recorded as not 27 on the balance sheet and also in box 95. And then we have next we're looking at accounts 258 to 261, whose balances are summed up. Of course those are capital added accounts, and they are recorded on the balance sheet as not 28, and the same figure is also recorded in box 96 on the tax return. And then finally we've got accounts 262 to 265, which are for drawings. The sum of their balances is recorded on the balance sheet as not 29 and also in box 98 on the tax return. And in this case we've got 8670. Now the figure for box 99 is generated. It's generated as a sum of capital brought forward plus the net equity change. Now the net equity change is equal to the capital added plus net profit or net loss plus minus drawings. How do we work that one out? We simply add them. This is a negative and that's a negative, and this is a positive, to end up with the net equity exchange that is added to capital brought forward to get closing capital. So This is the relationship between the tax return and the balance sheet. Now, if you're using our accounting app, you don't need to go through that because the values are already generated, as you can see here. Now that one is there, it is already there. All the values are already generated, and you simply have to copy from this extract that generates 60% of the figures to the actual tax return, whether it is hard copy or it's online. The values are already generated. That brings us to the end of this lesson, and in case you have any questions, please via the live sessions online, and thank you. Hello and welcome to this session of Mobile Practical Accounts Training. In lecture 2.4, we look at disallowed expenses. Now, these